Eddie, how are you?
Well, very good. It's great to see so many people in the room, and as Hong Kong is really bouncing back quick, I'm glad that you can all come and feel the buzz here.
All right, there's really a vibe, and hope you all had coffee, of course, and really great food outside. A reminder to everyone as well, you can send in your questions on the QR code earlier if you have any questions for Eddie at any point. I'll do my best to get that in. My timer tells me I now have 19 minutes and 30 seconds left. I think a good starting point would really be, Eddie, just let me know your thoughts. How do you think the economy is doing with this recovery?
It's been doing great. If you look at the first quarter of Hong Kong's growth, is 2.7%. Well, externally, it's still challenging. Exports is kind of slow because of the slowdown in the global economy. But domestically, the bounce back is really amazing in terms of especially consumption. If you look at the latest retail sales number, I thought in April, it's increased by 40% over last year. So it's the domestic consumption, the arrival of tourists, the investment that's driving Hong Kong's growth. And going forward, I think the Hong Kong government's forecast is between 3.5% to 5%. Our own take is that it might be on the high side of that range.
Okay. Interest rates have been a key topic earlier.
Right.
Nuno was mentioning earlier. We now have an interest rate, right, to contend with. We obviously import that from the Fed.
Right.
How are the rate-sensitive sectors doing in Hong Kong? Property, mortgages, what have you?
Well, there are many things that will affect, for example, property sector.
Yeah.
It's not really just the rates. One, the mortgage rates has not fully reflected the increase in the interbank rates here. And secondly, there are much more that's affecting, for example, the property market. The sentiment of people, the domestic demand that I talk about, the wealth that they're seeing because of the return of the equity markets. And if you look at the property market, it went down quite substantially last year, about 15%. But in the first 3 months of this year, we're already seeing a rebound of 5%. So despite the rate increase, the property market is actually rebounding quite nicely.
What about assets under management, generally speaking, given what we're seeing in some parts of the U.S., for example? I'm hesitant to use the word benefited.
Right.
Because it's been a painful time for many people. But in some ways, have we seen an increase in assets and deposits in the banking system here?
Well, the deposits has been quite steady so far this year. It's increased by about 0.5% in the first quarter. So in terms of flows, especially deposits, we're not seeing much flows yet. But what we are hearing anecdotally from different banks is that there are inquiries for account opening from different parts of the world, including some of the tech firms or venture capital funds coming from the US. It's natural, with all that's been happening around US and Europe, people might want to diversify. And if they want to diversify into Asia, Hong Kong will be the place.
Right. And since you brought it up, just as a plug as well, Bloomberg, we came out with a great story this morning, and I'm glad Nuno brought it up, that you've had to open some of your branches on the weekends too. With Golden Week, we've seen literally thousands of visitors from Chinese mainland coming here, lining up at Hong Kong banks to open bank accounts to take advantage of higher rates here in the city. I guess my question to you now is, the sort of nuance in the U.S. banking story is pressure on deposits, because some of those people are taking deposits and putting them into things like money market funds and that sort of thing. Are you seeing any pressure as far as that's concerned?
No. Well, in fact, the spillover of what's happening in the U.S. or even Europe to Asia and Hong Kong is really minimal. We're not seeing any concerns from investors or depositors. If you look at the Hong Kong banking system, the regulation, we are the regulators, extremely tight. And the capital adequacy ratio of Hong Kong's banks is actually, on average, more than 20%, as against the standard of 8% globally. And the liquidity coverage ratio is 160%.
Right.
As against only 100% in terms of international standard. So the banks here are very well capitalized, got big buffers, and if you look at the last 3 years, Hong Kong has gone through really a lot, and the banking system has been extremely stable and resilient. In many ways, we've gone through a real-life stress test on our banking system, and it's performed very well. So I think you can rest assured that Hong Kong's banking system is extremely resilient.
So no signs of stress? Nothing out of the usual?
Nothing unusual, nothing that we should be worried about.
That's great to hear. The other part of the conversation in the U.S. at least, there's been talk whether or not they have to raise the ceiling for deposit insurance, for example, right? Janet Yellen has come out and said they might do it, and then she said they're not doing it. Is there a similar conversation in Hong Kong? Are you looking to raise that as well?
Well, we actually had that conversation almost a year ago because the deposit insurance coverage in Hong Kong is now 500,000 Hong Kong dollars. It was in place quite some time ago. I thought it was 2006, which is like 17 years ago.
Right.
But the coverage is still very good because when you look at international standard, you want your deposit insurance coverage to cover about 90% of the depositors. And currently, we do cover about 87, 88%. But still, the Deposit Protection Board initiated a review last year, and they have engaged a consultant to look at whether there are reasons to raise that ceiling. And they're about to finish the review, and they can also take into account what's been happening in the US and Europe recently in thinking about that. I think there could be room for an increase, but I think we will leave it to the Deposit Protection Board to suggest what that will be. We'll come into the market for consultation in the second half of this year.
Right. Let's talk about the broader wealth strategy of Hong Kong in terms of just you wanting to cement Hong Kong as a hub. I mean, investors, depositors, they vote with their feet. And I guess what you alluded to there is they're coming into Hong Kong.
Right.
What do you think makes Hong Kong so resilient?
Well, in terms of the resilience of Hong Kong, well, I mentioned about the tight regulation in the banking system. People's confidence in the PAC is very strong. There's not been any change, even during the challenging years. But if we go back to the wealth strategy, I think there are two things I would like to mention. One is that if you look at the last 6 months, the government has actually put out a very neat strategy to attract more wealth and family offices to come to Hong Kong.
Right.
By, for example, offering tax exemption for single family office. The legislation will be in place very soon, and it will be dated back to April last year, so that everybody who have family office here from last year will benefit. They're also talking about they will shortly be reintroducing the capital investment entrance scheme, so that people investing their wealth in Hong Kong should be able to get residency in Hong Kong. We've also talked to SFC to streamline the selling process for sophisticated professional investors, including many of the private banking clients, so that with the client's consent, the whole selling process can be much quicker and easier, with a lot of the suitability or disclosure requirements waived, because these are the very knowledgeable investors. So all these are targeted at making our platform more competitive and easy to deal with. Plus, if you look at the Wealth Management Connect, which is to attract the wealth from Greater Bay Area to come to Hong Kong and invest into the global wealth products through the Hong Kong platform. We are, with the border reopening, we are seeing a lot of interest from the potential wealth clients, and I thought that's one reason why Nuno is opening their branches on Sundays. And we will soon be introducing Wealth Management Connect 2.0. We're talking to the mainland authorities to expand the product suite that the mainland investors can buy, or to simplify the selling process again for the wealth product. So it will come soon. It's now being discussed.
Do you have a timetable for 2.0?
Not yet. We're finalizing our discussions with the mainland authorities. I hope it can come soon, because it's the right time to put it out just when we are starting to open our borders, when flows will come this way. Definitely. Is
increasing the scope of who could be included in the Wealth Connect part of the conversation?
There are several aspects of that.
Yeah.
One is currently the Wealth Connect 1.0, in terms of the products that the mainland clients can buy, is quite limited. Only bond funds that the authorities thought is safer. But what we are suggesting is, can we expand the scope of that product suite to include, for example, global equity products, is a good diversifier anyway. And can we increase the quota for individuals, for example, or can we simplify the selling process? Currently, it's quite restrictive. The mainland banks, when they sell to the clients, they can't really push the products. It's execution only. Can there be more flexibility on the selling process? So it's really these areas that we're targeting on, and we hope that those measures will come out soon.
Are there specific products that you hope to be included that you think might benefit
I mentioned,
the greater?
For example, global equity products.
Okay.
That's one. Because now I think it's actually not a bad time to put that into your portfolio. Last year was harsh. But this year, I hope that it will be easier for investors.
Yeah, because last year was harsh. We're trading at 10 times earnings in Hong Kong, so it's a good time, I guess, in some way. Not that there's anything wrong with this. The perception that Hong Kong is mainland China's international finance center. Is that a perception you're happy to embrace?
Well, I think there are two parts of it. One is that the China element is important. You not only think about Hong Kong. If you think about the global finance landscape, the China finance element will be even more prominent in the years to come, whether it's investors wanting to increase their Chinese assets, or importantly, Chinese capital going out to the world to invest. So this China element is important, and Hong Kong is always the gateway, about the only gateway that connects China and the world. So we will be very proud to be to continue to be that gateway. But as I said, Hong Kong cannot be just China's financial center. We need to be global. We need to facilitate global financial investors and financial institutions to come to Hong Kong and invest in China and broader Asia. We need to be at the forefront of some of the global trends like technology. If you look at where we're going in terms of central bank digital currency, we're actually the most progressive to use CBDC for cross-border payment in terms of our pilot projects. Virtual assets, the ecosystem that we are going to create will be very global. The green finance, the green bond market that we have is actually a very global. So in terms of the other efforts like fintech or ESG or virtual assets, we really want to put Hong Kong in the forefront of the global landscape.
I mean, I was going to bring up virtual assets, but let's talk about it already. June 1st, am I correct? June 1st is when we have retail trading beginning?
Yeah. Well, June 1st is the time when the SFC the SFC licensed crypto trading platform will start operation. As to to what extent retail can participate and what products they can go into, I think SFC is still deliberating. They will announce very soon. But in terms of virtual assets, the philosophy that we have is very simple. This trend will continue. And plus, virtual assets of crypto is actually a very broad term. It's not really just on back crypto. You're talking about stable coins or tokenized assets in the future. So what we want to do in Hong Kong is to say that, hey, this trend will continue. Let's put in the right regulatory framework in using the principle of same activity, same risk, and same regulation. So our regulation will be tight. If you perform any activity that resembles traditional finance, we'll put in the same regulation to you. But under this regulatory framework, whether it's the trading platform for crypto or in future stable coins that we are going to have a legislation, we are working on that. But so under this regulatory framework for trading platforms, stable coins, etc., we will let the industry develop and innovate. We will let them create the ecosystem here. And that actually brings a lot of excitement. But that doesn't mean light touch regulation. If any participant thought that the regulation is too tight, they're welcome to go elsewhere. So we have this regulatory framework. Let's develop our ecosystem here in a healthy and sustainable way.
Are there lessons that you've learned from episodes elsewhere? I mean, last year was a challenging year for virtual assets, generally speaking. I mean, Singapore's raising their guardrails on this. You look at those examples. Are there any lessons that you want to take to Hong Kong so mistakes don't happen here?
Well, if you look at the Hong Kong approach, we were very tight in the last few years. Our guardrails were like that high, basically sort of forbidding a lot of crypto activities. But now our guardrails is lower to a reasonable and sustainable level. If you look at elsewhere, there's no guardrails in some places. The guardrails are very low. And there you see problem, like FTX. And if you look at FTX, it's really a matter of basic lack of internal controls, like segregation of client assets, meddling their own investments with clients' money, etc. So it's really those lack of basic internal controls that cause the problem. For our regulatory framework, our guardrails are here. And all those wrongdoings by the platforms that we saw in the last 1-2 years will not happen in Hong Kong. And that's how you can have sustainable development of the whole new spectrum.
Would you be supportive of traditional finance, traditional banks?
Right.
Increasing their exposure to virtual asset companies? Because that's really one of the key ways that side of the ecosystem get the funding they need to develop.
Right.
And how cognizant are you of just managing the exposure of traditional banks? And the recent example I can think of is SVB in the US, which I guess in some ways collapsed for different reasons, but just the concentration of the deposit base, with a large part of their clients in tech, and Web3, and what have you. I mean, that's really a very good case example, I guess, of how things could go wrong.
I think there are two parts of it. Yeah. One is when you talk about the exposure of banks to virtual assets, one is, of course, the exposure on their books.
Yeah.
That one, the Basel Committee has come out with clear guidance, and we will follow that. It's actually quite strict. If you're talking about unbacked crypto on the books of banks, it will carry a risk weight of, I think, 150% or something like that. So it's very strict. But for banks to do services, provide services for clients relating to virtual asset, we have already put out several guidance notes. We will put out more to let banks know what they should do in terms of, for example, AML, KYC measures to make sure that they really know the client. And for example, how to do the custodial service, what guardrails are needed. So I think there will be clear guidance for traditional finance service provider to be the kind of interaction between their clients and virtual assets. And the SVB issue is really not exactly virtual asset related. It's about concentration of the uninsured depositors. It's about maturity mismatch of their books. It's about the lack of stress tests. All these will not happen in Hong Kong because we basically treat all banks in the same straight regulatory way that we do.
Okay, you've taken me back to the banks. You mentioned we were having a conversation earlier. You're looking at the books of the banks, right?
Yeah. We've always been looking at the books of the banks all the time.
Nothing out of the ordinary?
No, not at all. If you think about well, let me give you one number that's there. It's not a special exercise, but we always track those numbers. Yeah. One problem that you saw in some of the US regional banks is the maturity mismatch. They have in their held-to-maturity books very long duration bonds, and that got really badly hit when rates increased. If you look at the Hong Kong banks, one, the held-to-maturity part is extremely low. Okay. And secondly, the held-to-maturity bonds that they hold, the average duration is only 2.3 years. So even if rates increase, the hit on Hong Kong banks is extremely small. So that's the difference that we are seeing and that we are talking about.
Okay, and that underscores your point earlier on the resiliency.
Correct.
Fundamentally on the balance sheets, there's really nothing to write home about there.
Yeah.
Just one last question, I guess, on virtual assets here. Predictability in policy is really at the core of this. If you want to attract the best, the biggest in terms of virtual assets, people need to be assured that there's not going to be any change in policy and in a sort of U-turn in that. Can you guarantee that policy certainty will continue and there will be an about face?
I think one good thing about the policy statement that came out last year, at the end of last year, is that it's a joint product by the Hong Kong government and all the regulators, including us, the Securities and Futures Commission, and Insurance Authority. So there's a consensus on how Hong Kong should think about the virtual asset ecosystem. And some of the regulatory framework, like the trading platform that's going to come into effect, the stable coin that's being drafted, they're all laws. The laws will be there and they will be clear for everybody to follow. The guidance notes that we give to banks, they're all in writing form. So, I think the transparency is important. As you said, people need to know what kind of regime you're operating before they come to develop their business here. And I thought the transparency, the clarity that we want to provide is all in the laws and the guidance notes that we produce.
Right. I mean, you guys have gone through a very long process on this consultation process as well. We have 2 minutes left, and I'm curious, have you ever done an interview with international media where the peg, Hong Kong peg, hasn't come up?
Well, it's always there, so I'm surprised that you're not asking.
All right, that puts me in a difficult situation.
For the record, the peg will remain, don't worry. We have no intention, no plan at all to change the peg. The peg has, this year is actually the 40th anniversary of the peg. It was there from 1983. Okay. It's gone through, I don't know how many financial crises and different business cycles. Importantly, it's gone through the last 3 years when Hong Kong was really facing the most difficult challenges. There's no erosion of confidence. There's no market suspicion, no market worry about the peg at all. So you can see how much the market has confidence in the peg, and there's absolutely no reason to change that.
Okay. For the record, I didn't ask the question, but yes. Thank you for clarifying. 40 years anniversary of the peg. Is it 30 years of HKMA?
Yeah, this year is also the 30th year of the HKMA. We were established in 1993.
Okay, and where's the party? Where's the party?
Well, the party is done already on the 1st of April, but we will be having more. Okay. We have 3 main events celebrating our 30th anniversary. The first was already done at Basel Committee meeting in Hong Kong in March, together with a banking conference. But the 2 main ones will be in November. The second one will be the Global Leaders Financial Summit, the second edition that we will organize in the beginning of November. We are inviting global leaders in finance area. We've already got confirmation, I think, from about 30 CEOs of global financial institutions that will come to that summit. And that number is growing because it's November. At the end of November, we will be hosting the BIS, which is the Bank for International Settlement, special governors meeting in Hong Kong, meaning that the central bank governors from around the region and also around the world will gather in Hong Kong for that meeting. And at the back of it, we will jointly organize a conference together with the BIS, inviting the central bank governors and the industry to talk about global trends. I think these 2 are the main events that we're hosting to celebrate our 30th anniversary.
Very nice. Is Bloomberg invited?
Well, you will be there. You were there in the first financial summit.
We were there last year.
And you were interviewing me on site.
Oh, yes, that's right. Thank you for reminding me. There's one question here. Do you view Singapore as a main competitor?
No,
okay.
No. There are so many financial centers in the world, and we always collaborate with each other.
We can all coexist happily. Eddie, thank you so much for that. Eddie Yue there, HKMA. Thank you so much.
All right. Thank you.
All right.